is your relationship with time? Are you wired and tired, stressed and overwhelmed, busy and going nowhere? Or just want to scale your business? Welcome to Take Back Time with your host, Penni Zelinkoff. Penni focuses on books, strategies, tools, and tips to help you work smarter and approach your time more strategically. As a result, you can have more energy, focus, and get more done in less time. Be more efficient and effective. Get ready to take back time.
Hello, and welcome to Take Back Time. My name is Penni Zelinkoff, and I'm your host. And today's show, I'm not going to be the only Penni Z on this show, let me tell you. Interesting enough, I had come into contact at a really fantastic event, CEO Space, and met another Penni Z. So it is possible there are two of us, and we're both kick-ass businesswomen. So Penni Z is going to be on the show today. And as we talk about take back time and how to be more efficient and effective, Penni's going to talk about it from the perspective of finance. So Penni Z is the CEO and founder of Pennywise Empowerment Network. And she also has a podcast called The Penni Z Show. And her mission is to help 1 million lives by empowering her clients to have a voice and to choose their financial freedom and overcome obstacles in their lives. And I'm going to keep this one short because she's going to be talking about it. But Penni Z, she trains her clients to minimize the roller coaster ride that so many have experienced in their lives around finances. And she believes that personal, professional, and financial stability go hand in hand. These areas, she says in quotes, these areas affect our quality of life. And when we are grounded in our life and have a life vision, we can make better financial choices. So when we think better and know better, we do better. So we already have met and know each other, Penni. Welcome to the show.
Penni, thank you very much. I know it's so exciting to meet another Penni, but another Penni Z. Wow.
I know.
I'm honored.
It's cool. It's very cool. And we think alike, in all the things that I see that you've posted and things that you've written, we have a like-minded connection in that context.
Fantastic. I love the kindred spirit.
So it's so great to have you here and talk about finance because there's a lot of entrepreneurs that listen to this show and people are frustrated, right? The markets, if they're in the financial markets in any sort, whether it's real estate, whether it's in the stock market, things are pretty, it's nerve-wracking. So before we go into that, what makes you passionate about finance?
So Penni, thank you for asking the question. I'm passionate about finance, but the finance has to do with empowerment. It really has to do a little bit with my story. You see, as you mentioned in my bio, the financial and the personal roller coaster rides that we live in our life doesn't have to be such high and lows. And with your theme about take back time, my idea of finance is to not only empower people to take back their choice and their voice within their finances so that they become empowered, that they can have quality peace of mind moving forward into their retirement, but they can actually take back time. And they can do that very simply through taking back and managing their finances in a very simple way.
So, you talked about personal story. Do you have a personal story that you could share with us that helps us get to know you a little bit better?
Absolutely. So I've been a real estate investor for over 18 years. And I started 18 years ago, didn't have a mentor, just kind of self-taught. And after about 15 years being in the industry, over the years, I used what's called person-to-person lending or private lending in the real estate world. It wasn't traditional, it was a bank or a mortgage. It wasn't hard money lenders. It was a person-to-person relationship lending situation. And about 3 years ago, as I was doing fix and flips, one of my lenders said, "Penni, why aren't you lending?" And I said, "What do you mean?" And she said, "Why aren't you a lender? You have cash flow and you have retirement from when you were in the corporate world. Why aren't you helping other small to mid-sized lenders lend?" And I had to think about it for a minute. I said, I have never been asked. I didn't know that I could do it, right? And so in very simple terms, when I was given the opportunity and learned about what being a lender for real estate investors meant, I was able to take back my time and I actually stopped doing the fix and flips and became a passive income lender. And so that's really a lot of my story. So my passion is empowering people to think differently and to learn about this very unique investment opportunity to be able to have peace of mind, because one of the other things that takes up our time is stress over finances, right? We may not be doing something, but we're stressing over it. Forbes said basically March 2019, there was an article that I read, 76% of Americans, even in today's market, are worried about retirement. Even though they're not necessarily physically doing something, they're taking their mind space and their time in stressing. And so that's where if we think better, we know better, we do better. That's where I offer a unique outside of the box way to passively invest, make a higher rate of return very easily with minimal time to be able to reduce that stress, to take back your time and quality of life in planning for your retirement. So it was really my own experience of somebody waking me up and saying, Penny, why don't you do this when I didn't know I could, that started me on this journey of empowerment and financial freedom.
That's so cool. I like how you're relating the take back time to where you were spending your time in fix and flip. There's a lot of, I'm not in that particular area, but I can imagine that there's much more hands-on, which takes up your time, right? Coordination, different types of activities that go on there, to going to more of passive income. And people can relate that in any area of their life, of that opening up perspective and seeing all the things that we're spending our time on. And is there an easier way? Is there a better way? And that's a great example in real estate. And some people are in their businesses in other areas, but how can they use that as a metaphor if they're not in real estate, right? And I know we're going to talk about that, but I just want them to be able to see that this context of thinking differently goes across everything that we do.
Absolutely, Penny. I mean, whether you're real estate, whether you're an entrepreneur, you're a corporate executive, for those of us who are looking for opportunities for outside of the box thinking, and also we're taught to diversify our investments, number one, and we're also taught to have multiple income sources. So this is a great partnership or a great add-on passive income opportunity that I help train and talk to people about when it comes to private lending, to be able to add on to your already busy life very easily with minimal amount of time, minimal amount of knowledge, and yet your rate of return for your investment is pretty high. I can't guarantee anything because I'm not an investment banker or anything like that, but on average—
I don't guarantee either.
Yeah, exactly. Have to have a disclaimer there. But really, if people are looking for multiple sources of income or diversification or passive income business, this mindset and this opportunity within the real estate investing world is pretty amazing.
So I want to get to that in a minute, but you said something that I think that you take for granted, that I think that many people who are listening are not told that, and they haven't heard that before, which is have multiple income sources. I think that there's a lot of people out there that don't know that all their eggs are in one basket in terms of all their income is coming from their regular job. And they may not be set up to really take advantage of different income sources or even know how. So for people who are listening, to let that sink in is imagine that not only did you have the job that you're working during the day, if you have a job and you get an income from that, but imagine that you got income from lending, that you got income from the stock market, that you got income from various different sources. Maybe you sell a product online and so forth. Imagine how much more financial freedom and flexibility that would give you by having multiple streams of income.
Absolutely. I mean, I've been taught that for many years, probably several decades of my life. I'm a little bit older than some and younger than others. But you mentioned that perfectly, Penny, because we all look at our job, or for an entrepreneur and a business owner, as one source of income. But what I help people do is, what is that excess cash that you have that's sitting in a bank account, that's sitting in a mutual fund, that might be sitting in stocks and bonds, or even a retirement account? There's actually a better way to invest that and be able to make a higher rate of return, which will help to bring in multiple sources of income. So if you don't have money currently set aside in any of these portfolios, you'll want to look at that as an option. But if you do have money set aside, there's a better way of getting a higher rate of return, making money quicker, and be able to do that in such a passive way that you're able to solidify and feel comfortable moving forward into your retirement. I'm just so passionate about people living their life and their desired life in their retirement. And it really came from experience, again, personal experience. My mom and dad only had one source of income, and that was whether they worked. If they got up every morning and they went to work and they got their paycheck, they had money. Now they put money away into a retirement account, That was their only source of income. And then my parents, and I love my parents, they're great people, but they got to retirement and they really had one and a half source of income. They had their retirement and a little bit of Social Security. Well, unfortunately, at that point, it's almost too late. And so not only were they working hard for their money in one way while they were working and being stressed out about it, they were then got to retirement and they were worried that they don't have enough to be able to live on in retirement. And that's really my passion, is to really help people think differently and plan differently for their current life and for their retirement life.
So you know what I'm thinking is that there's a lot of people online who might be saying, well, that sounds good for you, but that sounds risky for me. Like they're used to only having that one source of income. And if I were to take that money out of the bank or take it out of something else, that's risky, isn't it? What would you say to them for that kind of thought process?
Absolutely. Thank you for the question. Well, the first thing is I am a believer that you need to have something set aside for a rainy day and for emergencies. So when I work with our clients, I never recommend putting all eggs into the one lending basket, so to speak, especially right in the beginning when people are learning a little bit of a new skill in order to shift their money. First thing. The second thing is the beauty of being a real estate lender, or what I like to call be the bank or be the money in the deal, is if you look at a mortgage company, they actually secure their asset with the real estate. So the same thing that a mortgage company does, we teach our clients to secure your money with your real estate loan, with the asset, with a property, with a commercial building, with a single family home. Whatever you feel comfortable in lending on, the secured aspect of it or the minimizing of the risk is that first, we teach you how to do the due diligence on the property, on the investor and on the property. That's very important. Number one, do your due diligence. Number two, know what your boundaries are when it comes to what you're willing to lend on and not lend on, and stay within that lane. And number three, always make sure that you have your loan secured with the property. The beauty of that is when we teach you how to negotiate, how to do the loan in an up market or a down market as a lender, you still have security and you still have that asset. Because let's say, unfortunately, the worst case scenario, or let's say the best case scenario happens first, just to give you an example, and then we'll say the worst.
Okay.
So the best case scenario is I am actually putting a loan on a fix and flip. I have a 1-year loan on a fix and flip, and it's secured by the asset. And the investor, the real estate investor, pays me back in full. Great. I do my due diligence up front. I write the loan. We secured it with the county, and the investor pays me throughout the year, and I get my money back. Very simple, hardly any work for me to do when it comes to time savings, except for the little work that I need to do up front. But let's say for some reason that investor did not pay the money back, right? Just like a bank, we get that asset back. And as the lender, you now have multiple exit strategies in which to be able to get your money back and still make money off of your investment. So it's actually much less risky to do real estate lending than it is to have your money in the stock market. And I'll just give you
Tell us about that. I want to hear about that because I think that's the way people were taught how to invest, right?
Oh, absolutely.
Most people in the circles that initially that I was talking to, everybody invested in the stock market, and you had a financial advisor. That's all they advise you on is the stock market. They're not really financial advisors because they don't advise you across all different platforms of money, but that's what's out there.
Right. Mainstream America and the way our corporate financial institutions have taught us was to we either invest in stocks, we put our money in savings, or we put our money in a retirement account, which is stocks, bonds, or mutual funds. That's typically how we as Americans have been taught for decades. Now, financial planners are great people. Don't get me wrong. They're out there working hard to pay for their lifestyle as well. It's the financial institutions that has taught us. So let's say I have an investment in stocks, right? Whether it's in a regular stock or in my retirement account, I have no control whether the market will go up or down tomorrow, do I? As an individual, I don't, right? Even if I had $1 million in my retirement account, I still don't have enough power as an individual to control whether the stock market will go up and down.
But you don't have that power either in the prices of real estate either.
You don't. But in the way that you negotiate the loan, you have equity in the property to be able to minimize your risk. So for example, let's say again, I have a loan on a property that is secured by the asset. I have a loan with an investor that's secured by an asset. What that means is I would negotiate to have 20 or 30% of equity. So if it's $100,000, let's say the average retail price of a house is $100,000.
Okay.
That means as a lender, I would negotiate to loan perhaps $70,000 or $80,000. So I'm not loaning 100% on the actual value of the property because I want to minimize my risk to manage my investment in an up market or in a down market. If
so
it's
70% about the amount that you look for?
70% is a good rule of thumb.
Okay.
So if the market goes down 10, 20, 30%, then the investor, let's say the investor still has the property, they're still paying me on my loan. That value doesn't matter as much as if the investor defaults.
Right.
If the investor defaults and the market goes down, I now have negotiated the property with equity. I can keep the property as a rental property if I choose to. I can choose as the lender to fix it up and flip it and make money on the property. So with every deal, we teach and talk to our clients and talk to individuals who are interested in this type of thinking, how to negotiate not only the loan, but when you're looking at the loan and you're looking at the property, if you were to get it back, what are your 3 to 4 exit strategies in which you would want to own the property? That is the best way to minimize your risk. So even in a down market, you can still make money and you have the asset.
Distractions are the enemy of productivity. Go to distractionquiz.com and find out your distraction profile. Are you a time zombie or a hamster? Take this free distraction quiz today to rate your ability to focus on what keeps you from being a wizard. Go to distractionquiz.com.
Let's say back in 2009, when the stock market crashed, it crashed about 50% of its value. So on the day that it was strong, at maybe you had $10,000 in the bank. Within the next couple of days or so when it crashed, and it happened over several months, but let's say you had your money in the market and you stayed in the market. In 2009, at the very bottom of the market, with the 2007-8-9 crash, you would have lost potentially up to 50%, which means you would have only had roughly $5,000 in your retirement account. From there, it would have taken you, and you had no control over that, right? You had no control other, do I keep it in or do I take it out? And at what point do I take it out? And if you're taking it out on a down market, you're still losing money.
Right.
So the beauty of it is in the down market of 2009, it took investors on average 4.5 years to make their money back. Now, let's say $10,000, and I know you can't buy a house for $10,000, but let's say that $10,000 was on a loan and the market turned. You would be able to keep the property as a rental and have income. You would be able to possibly look at selling it for a quick sale and maybe making a couple $1,000s, still making your money back and a rate of return. Or you might, again, want to keep it, rent it, and wait for the market to return and sell it in a higher market. So I guess the bottom line, Penny, is what we try to do is to teach people how to minimize risk, is to negotiate your loan on the front end and to also negotiate how you want to own the property with multiple exit strategies to minimize your risk.
So that tells me that we have in real estate, in this type of lending, when you're doing it on a secured asset basis, that you're actually have less risk than what you have in the marketplace. If you're loaning less than 30%, you're leaving that 30% swing.
Yes, you have less risk and you have much more control, and you can negotiate a higher rate even in an up market or in a down market as a secured asset lender.
Well, and you also have cash flow, right? So
you also have cash flow.
They're paying you back. They're paying you back in cash. And you can decide, I guess, whether you want to put that back into some sort of a property or whether you're going to use that as income. Whereas if it's in the stock market, you're just seeing a % at the end of the year. And then I guess you roll it over or whatever. And that's good too. But this provides the added benefit of cash flow if that's what somebody's looking for.
You make a great point. Yes, it is a great way to add cash flow. The other point that I would like to make when we're talking about earlier about multiple streams of income. So when your money is invested in, let's say, the stock market, however that is, you have one source of income, and that's that your money goes up. With secured asset lending, you have potentially 3 or more ways of making money on one investment. So if you're a lender, you can charge interest, which is income. You can charge fees, which is another form of income. If you have a mortgage and you've gone through the mortgage lending process, you know the mortgage lenders charge closing fees and processing fees. And you can also charge points. So just on one deal alone, as a lender, you can have a minimum of 3 income streams to an investment in the stock market of 1 income stream. So it's a 3-to-1 investment, really. The other thing, again, is the only way you make money in the stock market is if the market is up. As a secured asset lender, the way that you secure your income and your investment is you can negotiate in an up market and a down market. Now, the beauty of a down market is more people, there are less people, how should I say this? There's less money available for real estate investors in a down market. For anybody who remembers 2007, 8, 9, and 10, in the real estate market, it was very difficult to get loans of any type. So the beauty of this is if you have money and you're willing to be a secured asset lender for a real estate investor, you make money in an up market because real estate investors need money in an up market when things are good. And they need money in a down market because there are less available options for them as well. So you really become a major resource to real estate investors in either type of market.
So that means you have the potential to charge more in terms of points or interest or whatever.
Now, you have the option to negotiate. There are guidelines. There's government guidelines that we talk and share the resources. But yes, in essence, you're able to negotiate your terms. So you can charge more in your interest, points, and fees. Again, based on, they're called usury guidelines, but they're very simple to understand. And they are online. And we provide a link and a resource for people to look at those and share a little bit more of what those mean. But yes, you're absolutely correct. You are in charge of your negotiation. So you can charge more in a down market and you can charge in an up market. So it's kind of a win-win situation for the investor, meaning the lender, and it's a win-win situation for the real estate investor as well. Because I've been in the market for 18 years and I can tell you there's almost not a day that goes by that someone is not asking me for money as a real estate investor. So there is definitely a need. And the beautiful part, I just want to go back because I know that managing your time is so important on your show, Penny, is that once you learn this, I know I'm talking about a lot of stuff that might be new to some of your listeners, but once you learn the simple system on the front end, you can set it and forget it. Once you learn the skill, once you understand how to set up your lending business, let's say, and you learn that in the beginning, then you can go anywhere, you can be anywhere as long as you have a computer, access to a phone. It's very, very easy to manage this passive income business. Once you learn the tools of the trade, then it's very easy and there's not a lot of time needed in order to do that.
Well, I just want to say that, on the side, when you said we talk a lot about time management and managing time and spend a lot of time talking about managing your thinking. So this is perfectly aligned with that, is managing our thinking. Mm-hmm. It brought a question for people to get really clear when you talk about return on investment. So if I were to put my money in some sort of short-term market, like a money market or something, right? And what kind of return I could expect on that on average, right? Compared to what kind of a return I might expect on a short-term loan. So if I took a period of a year, right? Maybe share with people what's the difference.
Sure, absolutely. And again, I just want to disclose I'm not a financial planner. And so I'm giving industry guidelines, kind of what's happening in general in the industry. So let's say someone had $100,000 in a money market account in the bank. They may or may not need to have to hold that in the account for a certain length of time in order to get their interest rate. On average, when I've looked the other day, on average, the interest rate that the banks are paying on a money market for you to hold a high amount, $100,000, it doesn't have to be 100, but I'm going to use that for the example.
Okay.
You're averaging between 2 and 2.5% rate of return.
Okay.
So I'm going to give the benefit of the doubt and go 2.5%. So on average, if someone had their $100,000 in a bank, in a money market, they would make $2,500 in interest that year. Now let's shift our mind for a moment. And let's say you're a secured asset lender. You do a loan with a real estate investor for 1 year. and you're able to negotiate. Now, the average, I'll give you the range and then I'll give you an example. The average is between 8 and 12% right now in the industry. That's the going interest rate for a loan as a private lender in real estate, 8 to 12%. You're also able to charge 1 to 4 points, which is another percentage, and anywhere from about $500 to $1,500 in fees is what the average fee is for a personal loan. So on $100,000, you're looking at, let's say 10%, which would be $10,000 for the year. You're looking at, let's say, charging 2 points right in the middle, which would be an additional $2,000. And you're making a fee of $1,500 for covering closing costs, expenses, attorney's fees, things like that. So for someone who is a lender for a 1-year loan on $100,000, they could, in theory, make over $13,000 on their money, which is a difference of over $11,000 between putting it in the bank in a money market or mutual fund and being a lender to a real estate investor. That's a big difference. Now, times that by 10.
That's why I wanted you to quantify it so that people could see. And of course, that varies, right? We're not holding you to anything, but you're looking at a significant additional return on investment of how, when you use your money in a more effective way and still be secured from a risk, there are ways. And that would take you how many years at 2.5% to earn that money?
Absolutely. And that's not guaranteed because the banks are the ones who are in control of the rate.
That's right.
Take the money out, or if you have to take out a certain amount of money for that year, then obviously your rate adjusts. So we don't control the bank's rates. We don't control the stock market, but we can control how we negotiate and manage our money for real estate investing as far as being the bank.
So what about taxes? Are there any tax disadvantages or advantages to being in this space?
Absolutely. So I advise people to talk to attorneys and CPAs and tax accountants on their personal situation. Now, if you obviously have money in what we call liquid asset, which would be just income, could be in the bank account, it could be in a stocks and bonds, you would have to pay tax based on your tax rate. So that would be something that we always recommend to talk to an attorney about how to set up your real estate lending company. We like to recommend that you put it into a business so that you have limited liability and some other benefits for that. And talk to your accountant or your tax advisor on what's the best way to invest. So that's on the liquid cash side. So it's just income, just like you'd be making money for work or in income other ways. And I apologize. But when you get to the retirement account, that's when there is a huge benefit. I work with self-directed IRA companies. I have one that I work with, Midland IRA, that also helps teach our clients about what's called self-directed. So if you're able to take your current retirement account and pivot it, which is just a rollover, it's a very simple way of moving your money from a traditional retirement account over to a self-directed retirement account. Not only do you maintain the tax benefits of the retirement account, but you're also able to invest the entire amount of your retirement account if you so choose. You're not limited to only a certain amount that you're able to, like some IRAs allow. And you have an opportunity, you're not limited to the annual contribution that the guidelines have for companies or for your IRA if you might have a single K with an employment or you're employed. So actually the tax benefits and the income that you can produce is much higher and better through this program than through other programs. Again, I'm not a tax expert. I do advise people and I do have people that I refer to tax experts, but it is actually huge benefit. So I'm able to, I know that self-directed IRAs, with your traditional IRAs, there's a limit in which you're able to contribute every year. As a secured asset lender, there is not a limit. And so we teach you how you can actually put more money away and have that tax deferment in your retirement account than you're able to do currently. So you're able to build wealth at a higher rate of return faster and a lot bigger than the way that the traditional retirement accounts are currently set up.
Well, that sounds pretty awesome. That sounds really like taking back my time.
It's one of those best kept secrets that the general population is not aware of. I'm passionate about educating people about this opportunity, and it's a great way to build wealth and to secure your future financially. And like you said, not only change your mindset about worrying about money to not worrying about money, but also having more time to do other things that you want to do in your life.
Absolutely. And contribute more. Like I know a lot of people who want to give more, and this would also put them in a position to give more and give more of their time to charities and different types of organizations that are doing good and creating impact, right? So this is also another way to, I believe, as a catalyst to bringing more impact and meaning in our lives because we can use it in different ways as well.
Absolutely. And I'm actually talking to my attorney about setting up a foundation so that we can help other people as well, whether we set one up or we partner with a foundation, because I agree with you. I think when you're given and receive abundance, you should give abundantly. And so I think that giving back to charities and organizations is fantastic. It's a great idea. It's not something I have in my normal presentation, but I love that, Penny. And I also think that for those people that think about leaving a legacy for their children, family, for charities, it's another great way to just add additional value to that legacy.
Absolutely. And imagine you only find this, let's say, when you're coming close to retirement. Imagine that you started out and you passed this another way of legacy, that you passed this knowledge, right? Not just the money, but the knowledge of how to build wealth to your grandkids and others in your family. That's really huge too, in terms of legacy, so that they can stress less about their finances for their whole life.
Yes, absolutely. I mean, this way is a great way when you talk about time management. Those in their 40s and 50s that are worried about retirements coming sooner than later than someone in their 20s, this is a great time management tool and a way to build wealth quicker, which is important. But one of my passions is to be able to change the mindset of how people think around money to empower them to have the conversation about money, wealth, and investments. And would love to put together a youth program to be able to educate people, not only educate the parents and the adults in our society and have them have that conversation, but also to be able to educate our youth as well to think differently, know differently, and do differently.
Absolutely. Well, where can people find out more information about the education that you're doing now? I could imagine that there's some people who are thinking, I need to know more about this.
Well, absolutely. Well, thank you for the opportunity, Penny. I greatly appreciate it. So they can reach us in one of two ways. Obviously, we have a website, www.pennywise.com, and I'll spell that. It is spelled Penny, Penniwize, so pennywise.com. Or they can email us at zteam, for Penny Z, zteam@pennywise.com.
Awesome. Is there anything else that you wanted to share with the audience before we close out?
I'm just really excited about the opportunity to be on your show and excited to spread this just incredible way of thinking. I'm also a speaker and a podcast host, so obviously would love to be able to talk to people if there's anyone out there that is looking for a motivational speaker or would like to learn more about financial education. I call it wealth education. I would be more than happy to have a conversation with them.
Wonderful. So there you have it. That's Penny Z's 2 cents. And since there's two of us, I think that equals 2 cents, right, Penny?
Absolutely. The best 2 cents ever.
Absolutely. So there you have it, guys. Thank you so much, Penny, for being here. It was really amazing. And I really think that people will be able to walk away from this show and really have a different way of looking at their finances.
Thank you again for the opportunity, Penny. It was great.
And thank you all for being here and being open to thinking differently. Because you've heard me say it before, that productivity is just a byproduct of thinking and acting more strategically. So when we want to be better with our time, it's about really managing our thinking. So this Penny Z said it must be true. So thank you all for being here, and we will see you in the next episode. You're listening to Take Back Time, and this is Penny Zenker.
Thank you for listening. Today's topic is another opportunity for you to put the knowledge you learned into practice. Tune in again next week for more strategies that will help you have more energy and focus to get more done in less time, so you can continue to take back time.